Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency markets continue to demonstrate their characteristic volatility and resilience as we witness a fascinating array of developments across multiple blockchain ecosystems today. The global cryptocurrency market capitalization stands at approximately $3.98 trillion, reflecting a slight 0.37% decline over the past day. Yet beneath this surface-level stability lies a complex web of technological advancement, regulatory evolution, and institutional adoption that continues to reshape the digital asset landscape. Bitcoin, the flagship cryptocurrency, finds itself in a particularly intriguing position today, trading at $114,833 after experiencing a 0.67% decline. This price action occurs against a backdrop of mixed market sentiment, with analysts from Sentiment warning that the cryptocurrency market may be approaching a potential top amid heightened social media discussions about Federal Reserve rate cuts. The analytics firm has observed that keywords related to Fed policy have reached an 11-month high in online conversations, which they interpret as a sign of excessive optimism that historically has preceded market corrections. This development suggests that while Bitcoin has maintained its position above $115,000, the underlying market dynamics may be more fragile than the price action initially suggests. The institutional narrative surrounding Bitcoin continues to evolve, with mining operations demonstrating remarkable resilience and growth. Recent data indicates that Bitcoin's hash rate reached record levels of 902 exahashes per second in August, representing a significant 47% year-over-year increase. This surge in computational power dedicated to securing the network reflects continued confidence from mining operators, who have invested heavily in infrastructure despite facing increased energy costs. The revenue per exahash has risen to $59,400, the highest level since December 2024, providing miners with improved profitability metrics that justify their continued expansion. Perhaps more intriguingly, the mining landscape is undergoing a strategic transformation as companies diversify beyond traditional Bitcoin mining. TeraWulf has secured a deal to host 200 megawatts of artificial intelligence workload with FluidStack, backed by Google, which will acquire an 8% stake through warrants. This pivot toward AI-linked infrastructure demonstrates how mining companies are adapting to capitalize on the growing demand for computational resources beyond cryptocurrency mining, potentially creating new revenue streams that could support network security even as Bitcoin rewards continue to have. Meanwhile, Ethereum presents a compelling counterpoint to Bitcoin's modest decline, with the network's native token gaining 1.21% to reach $4,775.68. This upward movement coincides with growing institutional optimism surrounding Ethereum's potential to surpass traditional finance infrastructure. Billionaire investor Peter Thiel's Founders Fund has been making significant investments in Ethereum-related assets, betting on the network's ability to serve as an alternative channel for clearing and settling traditional financial instruments. This institutional backing reflects a broader belief that Ethereum's smart contract capabilities and established DeFi ecosystem position it advantageously for real-world asset tokenization and traditional finance integration. The decentralized finance sector continues to demonstrate robust growth, with Aave's strategic expansion to the Aptos blockchain representing a significant milestone in cross-chain DeFi adoption. Aave, commanding a total value locked of approximately $70 billion and holding a 62% market share in the DeFi lending sector, has deployed its V3 protocol on Aptos, marking the first time the lending giant has moved beyond Ethereum virtual machine-based chains. This expansion required rewriting Aave's codebase in Move, Aptos's native programming language, representing a substantial technical undertaking that underscores the protocol's commitment to multi-chain expansion. The implications of Aave's Aptos deployment extend far beyond a simple network expansion. By entering an ecosystem with limited DeFi competition, where only one of the top 5 protocols maintains over $1 billion in total value locked, Aave positions itself to capture significant market share in a rapidly growing blockchain environment. Aptos's stablecoin market capitalization has surged to $1.27 billion, representing a doubling from January levels, creating substantial opportunities for lending and borrowing activities that Aave is well positioned to facilitate. The non-fungible token market presents a mixed picture today, with overall transaction volume declining by 25.78% to $134 million, yet showing encouraging signs of user engagement growth. The number of NFT buyers increased by 25.74% to 450,096, while sellers rose by 25.91% to 321,107, suggesting that despite reduced transaction values, market participation remains robust. This dichotomy indicates a potential shift in NFT market dynamics, where increased user activity doesn't necessarily translate to higher transaction volumes, possibly reflecting a maturation of the market where speculation gives way to utility-driven adoption. Ethereum maintained its dominance in NFT trading with $60.7 million in transaction volume, though this represents a 41.63% decline from the previous week. However, other networks showed more resilience, with BNB Chain recording $20.6 million in volume with a 10.63% increase, and Polygon demonstrating particularly strong performance with $16.1 million in volume and a 37.86% increase. This diversification of NFT trading across multiple blockchain networks suggests that the market is evolving beyond its initial Ethereum-centric focus, potentially reducing single network dependency and creating more resilient trading ecosystems. The regulatory landscape continues to evolve at an unprecedented pace, with the Securities and Exchange Commission's Project Crypto initiative representing a paradigm shift in how U.S. regulators approach digital assets. SEC Chairman Paul Atkins has outlined ambitious plans to create clear, practical rules for crypto asset distributions, custody, and trading, while facilitating the onshoring of crypto businesses previously driven offshore by regulatory uncertainty. This initiative includes plans to modernize custody requirements, enable trading of both security and non-security crypto assets on regulated platforms, and support the development of comprehensive financial service platforms. Simultaneously, the Commodity Futures Trading Commission has launched its own crypto sprint to complement the SEC's efforts, with Acting Chair Caroline Pham announcing plans to enable spot crypto asset trading on CFTC-registered futures exchanges. This coordinated regulatory approach between multiple agencies suggests a comprehensive strategy to provide regulatory clarity while maintaining appropriate oversight, potentially creating a more favorable environment for institutional adoption and innovation. The security landscape remains a persistent concern, with sophisticated crypto scams continuing to evolve and target unsuspecting users. Recent incidents include a social engineering attack that resulted in the loss of 783 Bitcoin worth approximately $91.4 million, where attackers impersonated hardware wallet support to gain access to victim credentials. Additionally, address poisoning scams have resulted in over $1.6 million in losses over just 5 days, demonstrating how attackers exploit user behavior patterns, such as copying addresses from transaction history rather than carefully verifying each character. These security incidents highlight the ongoing challenges facing cryptocurrency adoption, where technological sophistication must be balanced against user education and practical security measures. The evolution of scams to include artificial intelligence-powered deepfakes and increasingly sophisticated social engineering tactics suggests that the security landscape will continue to require constant adaptation and improvement. Solana has emerged as a standout performer in the altcoin space, with recent network upgrades and ecosystem expansion driving renewed investor interest. The blockchain's focus on high throughput and low transaction costs continues to attract developers and users, particularly in the meme coin sector, which has experienced significant growth alongside Solana's price appreciation. The network's ability to handle large transaction volumes while maintaining low fees positions it as a compelling alternative for applications requiring high performance and cost efficiency. The institutional adoption narrative extends beyond individual cryptocurrencies to encompass broader market infrastructure developments. Exchange-traded fund applications continue to proliferate, with analysts anticipating approvals for numerous altcoin ETFs by the end of summer 2025. This expansion beyond Bitcoin and Ethereum ETFs represents a significant milestone in cryptocurrency mainstream adoption, potentially providing traditional investors with regulated exposure to a broader range of digital assets. The intersection of artificial intelligence and blockchain technology continues to create new opportunities and challenges. From mining operations incorporating AI workloads to DeFi protocols utilizing machine learning for risk management and optimization, the convergence of these technologies is reshaping how blockchain networks operate and create value. This trend suggests that future blockchain development may increasingly integrate AI capabilities, potentially creating more intelligent and adaptive decentralized systems. Market sentiment remains cautiously optimistic despite warnings from analytics firms about potential market tops. The Fear and Greed Index maintains a neutral reading of 53 points, reflecting balanced market psychology that neither exhibits excessive euphoria nor panic. This equilibrium suggests that while individual assets may experience significant volatility, the overall market maintains a degree of stability that could support continued institutional adoption and technological development. Sinui. The global nature of cryptocurrency markets continues to create opportunities for regulatory arbitrage and innovation, with different jurisdictions taking varying approaches to digital asset regulation. Japan's Financial Services Agency's proposal for 20% cryptocurrency taxation represents one example of how governments are adapting their tax policies to accommodate digital assets while maintaining revenue generation capabilities. As we observe these developments, it becomes clear that the cryptocurrency and blockchain ecosystem is undergoing a period of rapid maturation, where technological innovation, regulatory clarity, and institutional adoption are converging to create new opportunities and challenges. The balance between innovation and regulation, security and accessibility, and centralization and decentralization continues to evolve, shaping the future trajectory of this dynamic industry. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.